interest rates will skyrocket. We have another threat in the global financial system that is currently developing right now in Japan, and I wanted to bring this information to you in case you're looking to buy in the future, possibly more than likely not in the near future, but in the future if you're looking to sell as well, because this will definitely affect how many buyers will be available to you in the market. So just wanted to give you guys a little bit of introduction. I'm going to show you a little bit of a video that I found the other day. It is from the YouTube channel breakpointtrading.com or breakpoint trading on YouTube. I think I got it this time. So anyways, the person who runs that channel, his name is Dan Bird. I've been following him for about 3 or 4 years now, and he has been the most accurate person I have seen on YouTube that follows pretty much everything. He's been retired for a while. He lives down here in Florida, and he has predicted a lot of things correctly and keeps track of a lot of different things. And a lot of my information that I get, where I create my ultimate thesis, is revolved around a lot of things that I look at, but I also look at other things that people are looking at, and he is definitely one that helps me determine my ultimate thesis on things. So I'm going to leave the link to the channel so you can watch the whole video and get you to that channel if you're interested in stocks, in real estate, and what's going on in bonds, all the things that you might be interested in. And so hopefully maybe you can take advantage of an opportunity for you to learn how to trade stocks. It teaches you how to trade, teaches you how to read graphs in the stock market, what a hammer means, what a cup and handle means, what a shoulder might mean, a head and shoulders, what that might mean, all those kinds of things. Hopefully that provides you some value, but I want to bring you this because it can affect the 10-year. And follow me for a long time, you know that the Fed funds rate does not influence mortgage interest rates fully. It does have a small influence on it, but not a huge impact like the 10-year Treasury does. If you've been following me, exactly where rates have been going, because I am the one who's always saying when the Fed cuts rates, the 10-year will rise, and so will interest rates. Now, there are other things that can affect the market, like credible threat theory. If you don't know what that is, basically it is tools that the Federal Reserve has to be able to influence the market. Not only them, but politicians also use them as well. If you caught that little note from Donald Trump the other day that he's going to drop $200 billion, he's going to make Fannie Mae buy $200 billion in mortgage-backed securities. They didn't even need to do it. Trump just announced it, and the market reacted. So that's just a small example of what it is. So without any more ranting, I want to give you all this information. Here's a video. I hope you found it educational. Like, subscribe, drop a comment down below. Let me know what you think, and let's have a discussion about it. Thanks, everyone. Have a beautiful day.
The Japanese JGB, and I put in one for the 10-year right here, but the JGB 30-year is the one I have been looking at. And I've been tracking this for a while. I've mentioned to people how important this is. It's not going to really show up in the market for a little while. It doesn't happen right away, but it's something to be aware of. So we are now at 3.5 on the 30-year. The high right here was at 3. So we're right at the high right now. That's for the 30-year. If I go back 5 years, you can see it's going parabolic, and it's actually accelerating to the upside. This is not good for the global markets. If this continues, it will not be good for the U.S. market either. If we look at the spreads, I think the key where things start to break, if the Japanese spread down here gets below this support line at 1.5%, and we're heading there pretty rapidly right now. Up here you can see the Japanese 10-year, how quickly it has moved up and how it is actually going parabolic right now. So this, you can see the German and the US 10 years just kind of move alongside each other ever since back here in 22 and especially in 23, and then started to really accelerate in 24. It is now up 7,000% in 5 years. 7,000%. The actually 7,300%. whereas the US 10-year is only up 281%, and the German is up 600%. But the Japanese is up 7,000%. So this is something you really should keep an eye on. Keep watching this when this gets down here. Things are going to start to break. I actually I also included the 10-year in here as well. So you can see the 10-year. Oops. All right, it's not going to let me open it. All right. But I did not a Google search, but an AI search. What happens when the 10-year gets above 2.5%? So it would be one of the most consequential shifts in Japan's financial landscape. 30-year high in yields projects a 10-year could reach 2.5%, calling it a 30-year high. Be pressure on Japanese financial institutions, Japanese bond time bomb, carry trade unwinds, global risk asset sell-offs. So risk assets across the board will start to sell off when it gets to 2.5%. It's at 2.18 right now. Japanese investors may bring money home. I will guarantee that's what will happen. They will bring money home. In fact, what they probably will do is right here, global market impact. Global yields will go higher, so the 10-year will go up. Pressure on U.S. and European equities, so equities will drop significantly. Could trigger volatility, reduce Japanese demand for foreign bonds, meaning not only will they not continue to buy foreign bonds like the US Treasuries, Japan is the biggest holder in the world of US Treasuries. So not only would they stop buying US Treasuries, they might actually even start selling them. And if that happens, it's going to push the 10-year up significantly, and the Fed will have no control over that. The Fed will not be able to control the 10-year if all of this happens. So keep an eye on this. This is really important. Again, it doesn't happen overnight. It's not going to happen. It will probably happen all at once when it happens, but we may still be a ways away from this actually happening. All right, that's it for today. Let me go back and see where we're at. See what the S&P is doing so far. Looks like it's sitting right down here on last Monday's open, but it's a big gap down. Right now it is a 11:10 on the East Coast. So might just sit here. We'll see if it starts going back up. This will be important. The close today will be really important on this, especially as we head into options expiration on